Did you hear about the recent surge in the Dow Jones and S&P 500? This is no ordinary fluctuation. It all began with a temporary tariff cut agreement between the US and China. This agreement, signed by both nations, led to a reduction in reciprocal tariffs, effectively easing trade war concerns. In the aftermath of this agreement, stock markets responded with enthusiasm. The Dow Jones leaped over 1,100 points, while the S&P 500 rose by 3%. Even the Nasdaq Composite posted significant gains, with technology stocks such as Tesla and Apple leading the charge. But it wasn't just technology stocks that benefited. Big players like Nvidia, Amazon, and Tesla saw their stocks rise too. The agreement sparked a buying spree, with the dollar and US Treasury yields increasing while oil prices rallied. Even the pharmaceutical sector saw positive movements. This came after President Trump signed an executive order to lower drug prices in the United States. As a result, pharma stocks rebounded after an initial decline. However, the effects of the tariff cut agreement weren't limited to stocks. Gold prices fell as investors turned their attention to equities. Even Bitcoin experienced a slight decline. In the midst of all this, key economic data releases are expected this week. These releases could provide further insight into the state of the economy and the impact of this tariff cut agreement. To summarize, a temporary tariff cut agreement between the US and China led to a surge in the stock market. This had wide-ranging effects, from boosting technology stocks to causing a shift in investor focus from gold to equities. It also resulted in a rise in the dollar and US Treasury yields and a rally in oil prices. The agreement has certainly shaken things up in the financial world. As we await further economic data releases, it will be interesting to see how the market continues to respond to this tariff cut agreement. Stay tuned for more updates on this fascinating turn of events.